Good evening, everybody. Uneducated Economist here. So this is my third video of the day. Would like to thank Zarin. Zarin sent me an email and is the inspiration for this video. In that email, Zarin asked, or he said that he believes that inflation is coming, and what do I think about inflation? And then what commodities could he invest in that are part of the real world, not stocks or futures? That really limits you on what you're going to end up buying. Inflation. Let's talk about inflation first. Is inflation coming? It is the talk of the town that we have inflation, that we are going to be having inflation. In fact, the Federal Reserve is so confident that we're going to have inflation, and the lack of inflation that we've experienced over the last 10 years, they're going to let inflation run above the 2% target that they would normally shoot for and let it run hot for a while to make up for the fact that we have been running under the 2% target for the last 10 years, except for a couple of times. Their whole idea is that we're going to have an average inflation of 2%. So we have to run hot for a while to make up for the fact that we haven't achieved inflation for quite some time. Now, why haven't we seen inflation? This doesn't make sense. The Federal Reserve went into some massive money printing 10 years ago, even a little bit longer now, 12 years ago, called quantitative easing. And what they did is they printed up a bunch of money. Well, they don't print anything. They created these digital dollars in a computer, and they traded those things for a bunch of treasuries and mortgage-backed securities coming from the big banks. This was taking the toxic assets, the mortgage-backed securities, the housing market, away from the big banks out there to make their balance sheet better so that they weren't so exposed to some ugly loans. So the Federal Reserve took those housing market under their wings, so to speak, and put it on their balance sheet so that the big banks could be free to go back into their business again without having these toxic assets on their balance sheet. The money that was printed from that, or created, never really left the banking system. It stayed there on deposit over at the Federal Reserve. Now, here's the thing about this money. After it's created, that is inflation. Okay? So the inflation has already happened. It's here. We just haven't seen the results of inflation with higher prices. Well, depends on who you ask and what you're asking. Is price increased? Which prices? But according to the Federal Reserve, we have run under that 2% target inflation, the CPI. Now, it's really difficult to try and judge inflation by the CPI index because they keep changing the metrics on it. If you compared inflation today to the way they used to do it back in the 80s, you would find that inflation is running very hot and that things are not even close to the way they are today. There's a great website out there, Shadow Stats, who breaks down all the numbers as if they were the way they were back in the 80s or at different times. So it really gives you an idea of where inflation and what the numbers are really like, considering that they're all manipulated and, obscured and not really reflective of what's going on inside of the economy. They adjust those numbers to show you whatever they want them to be. Okay. So inflation, already here. We've already got it. We just haven't seen it show up in the prices yet. Now, are we going to see it show up in the prices? Here's the thing about inflation. When you have the debt-based currency that we have, there ends up being some really interesting things that I never really thought of until I heard Dr. Lacey Hunt give an interview on Macro Voices. It was an awesome interview. I had to listen to that thing like 3 or 4 times to even wrap my head around it. But what he said made a lot of sense. And now if you think about it like this, and I'm going to try and do this really simply for you guys because it comes down to bonds. Bonds are the basis of our money. The Treasury creates a bond. The bond is an IOU. That's all it is. It says, hey, I'll sell this thing to you, and I promise over the course of 10 years or a year or 30 years or whatever the bond is for or the note, I'm going to buy or sell this thing to you, and I'm going to pay you an interest for that. That document that you get, which is not really a document anymore, again, it's back into digital numbers. It's just an entry on a computer screen, but it used to be a physical item. That bond can be traded or sold or done whatever with after you have purchased it. It is in itself a tool of debt that you can sell. Now think about it like this for just a second here. If this thing has an interest rate that pays a certain amount that's set, and all of a sudden the interest rates out there start to drop, that means the next investors coming in to buy the bonds are not going to get paid as much as the one that you have because yours pays a higher interest. All of a sudden your bond can turn in for a profit. Sell it for more money. You see what happened there? Because it has a higher interest rate, and the investor who's buying the new bonds coming up will not get as high an interest rate as the one that yours paying, yours carries a premium. So anybody who's holding bonds as interest rates drop are in the money. Okay, so just keep that in mind for just a second. A bond investor, when they buy these things, are expecting the interest rate from it. That was a typical bond investor. They were out there looking for secured income, fixed income. You can find it in bonds, you can find it in corporate bonds, you can find it in stock, dividend paying stocks. You can find some fixed income there because they pay a dividend. So there's areas that you can find fixed income. And US government bonds were by far the safest place in the world to get it. And if you were a millionaire and you were living back in the 80s in the United States, you could buy a bond that paid close to 15%. We're just going to say 10%. If you had $1 million tied up in 10-year treasuries that paid 10%, every year you would be paid $100,000. It's a pretty good deal. If you had $1 million, you could just live off the $1 million off of the secure, safe asset of the U.S. Treasuries. And all that $100,000 would buy you a good time, it would buy you houses, it would buy cars, it would buy stuff. It would be out there moving. But now you have $1 million tied up in 10-year treasuries and you're going to get paid what? $8,000? Does that seem like anything that you would want to be part of? Have $1 million tied up for 10 years and all you get is $8,000 a year from that. How much of that money is going to go out there into the economy? How many houses are you going to be able to buy? How many cars are you going to be able to buy? How much traveling are you going to be able to do on $8,000 tied up in U.S. Treasuries? Fact is, you won't. So the money is not creating the money velocity that you would expect from all the money printing. There's very low return on investment from the capital that you put into it. So this is a problem when it comes to inflation. Because if the investor doesn't get a return on the money, then they can't spend the money into the economy. Very interesting time there. So, now that we know why it is that we haven't quite seen the inflation, knowing that all the money is there for the inflation to be, because it's already created, inflation is here. What is it that we can do to protect ourselves from this scenario? Okay. This is hard because ultimately, I feel being in cash is one of the best places you could be. And I know people are rolling their eyes and shaking their head and they just don't get it. They just don't understand why. And the reason is the demand. The demand for dollars. See, it's not just the demand that people want the dollar or that it's the world reserve currency or because nations turn to it when they fail. It's not just some magical power that the dollar has. It's been set up. It operates the world currency. So contracts are written in dollars. And all those contracts, when they're due in dollars. And now the demand for dollars, when those contracts start to come due, or better yet, when they're just trying to cash them out, could be huge. See, that's part of the Federal Reserve's problem, is that they're not just dealing with the United States and their economy, they're also trying to supply the world with dollars. And they're trying to do it in such a way that they can provide the world with the dollars that they need while not creating the hyperinflation here in the United States. Because when those contracts start to come due and the dollars are demanded to pay them, the dollar strengthening could cause various issues within the economy, being exports being one of them. So as this world starts saying, hey, these contracts are due and I need to get mine, and if mine's done in dollars and I need to get my dollars so I can either transfer it into something else or at least just get out of this contract, then it's dollar on. And as people are striving to get these dollars, the demand starts going up for them, the strength starts going up for them. Pretty soon, the person who is holding them is able to buy a lot of stuff. Will that last forever? No, because at some point, the people are going to say, hey, we no longer want our dollars or your dollars. We don't want these contracts in US dollars. We want these contracts in digital yuan. We want these contracts in Bitcoin. We want these contracts in gold. We want these contracts in oil. You see, this is where things could lead to. And there's no other currency out there that quite matches gold. And the reason is that everybody has already used it at some point. Every nation has already had a system that involved gold. With the digital component part of it, you can make gold work. I'm not the smartest guy in the world to try and figure out how a gold standard would operate, but there are plenty of people who are, and there is a way. Bitcoin is a wonderful system. I love it. I absolutely love the idea of blockchain, and I love the idea of Bitcoin digital currency. It's a deflationary currency, meaning that more will not be created, only so much ever can. Once that is in existence, that will all there ever will be. And what I love about it is somebody tries to corner the market and buy up all the Bitcoin, you could almost go to an infinite number to the right of the decimal. You will only make it stronger, more valuable. So now what do you do? What do you do? I personally hold cash, silver, and cryptocurrencies. Those are my three. I do own some stocks, I own some mining shares, and I own some ETFs. Not much, but I do have some stocks. Getting away from stocks, getting away from futures, getting away from the third-party promises that somebody else is going to make you, that really only leaves you with cryptocurrencies and Bitcoin. Anything else is not an investable commodity to have on hand. And Bitcoin's not even really a commodity, it's more of a service, in my opinion. So silver is what it comes down to, silver and gold. Those are the two places that you want to be, or I guess the one place, the precious metals, is the one place that you want to be during a hyperinflation scenario. It is the only thing that is worldwide recognized, accepted, tested, understandable. There's nothing else quite like it. And a lot of people will argue about whether or not gold will be a tradable commodity when the whole system collapses. Just look at all the countries that has economies that have failed, and almost all of them turn to two things: US dollars and gold. And then other various currencies around the area, euros, or maybe like the neighboring country's currency or something. But the two number ones, gold and US dollars. So how to buy gold and silver. That one, I have a great video, how I buy gold or how I buy silver. I will leave a link to that one down in the description for you guys. It's an excellent video, and it really breaks it down, in my opinion, in a very average person will be able to do. I mean, it's nothing like out of the ordinary. It's not some big investment plan. It's not hard to do at all. So I'll leave that down in the description for you guys. It's an excellent video. So that's my opinion on inflation. It's going to be a difficult task to have that inflation in the sense that we would expect it to be. Like this hyperinflation scenario where all of a sudden things are jumping up every single day like you saw down in Venezuela or Argentina or something. I don't feel that we're going to have that type of inflation anytime soon. And in fact, I think it's going to be tougher for the Federal Reserve to actually achieve that inflation. I think deflation is probably the bigger issue. And it's because of the way the system is set up and the return on investment when interest rates go to zero. Now, there's going to be changes in the future when they go into digital assets like digital currencies, negative interest rates to a business, to personal accounts. Businesses will be shifting the way that they conduct everything out there as far as employment, transferring of anything. There's going to be a whole new system coming up of automation and changes. And we're not going to recognize the economy the way it is. I mean, it's not even going to be the same thing again. You take all this mess that they have, all the debt, the interest rates, the cryptocurrencies, all that stuff, and if you were to just smash it all, right? Just take it all and just it all failed. What can you go pick up? You can still pick up the silver and gold. Anyhow, I'm going to leave it at that. I hope that explained things for you there, Zarin. I'm not any kind of investment financial guy. I don't know what you should do with your money. If you are 18 years old or if you're 80 years old, you are going to have so many different things that you're going to need to do with your money. Not even the same thing. But if you're trying to protect yourself from inflation, you're trying to protect yourself from the banking system. And if you're trying to protect yourself from the banking system, then you need to have silver in hand. It's the only way to do it. Okay, I have a couple of mail pieces here I'd like to open up for you. Just picked these ones up today. This one is from Philip. Right on, man. I'm pretty sure this is the same Philip who sends me stuff kind of regularly if I got it right. So let me see here. What's this? Carnivore bar. Interesting. Oh, hey, right on. Carnivore bar. Before digging into your carnivore bars, please keep in mind that they will be slightly softer in warmer weather. This just means that there are zero fillers or preservatives used. The bars are still good and the shelf life is not affected by temperature as a result of the technology we use to make them. Feel free to throw them in the fridge overnight to harden, or enjoy them at room temperature. We promise they are delicious either way. Okay. Hey Simon, we love your no nonsense approach to all these financial shenanigans. You're our favorite kind of economist. We're preparing for the apocalypse with shelf-stable food and thought you might like to try it. The carnivore bars is based off of pemmican? I've never heard of that. An ancient survival food made by Native Americans. Hope you enjoy. Philip, the carnivore bar team. All right, so carnivore, I guess maybe Google that and see what it's like. I don't see a website on here or on the card or anything, but check out carnivore bars. Right on, Philip. Thank you very much, man. I am totally going to enjoy those. I hope. I'm sure they're delicious. So. And I'll give you a review. I'll let you guys know what they think. Or what I think. But I'm going to share them with the family too, so we'll let you know what they think as well. Okay, set that down here for a second. Okay, and now this one is from Jason. Jason Nevada. Ha 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 ha, yeah! Right on. Something else I can do with the family. Monopoly, the ultimate banking game. Nice. Oh, it's been opened at one point. I guess I should cut it the rest of the way. Huh, something tells me, is this? Yeah, right on. It looks like it's the all new on your ultimate bank cards. Own it all on your ultimate bank cards. Very cool. So it's done with like these debit cards you have on the side. Very cool. Right on. Well, I'm going to play that with the family for sure. Right on, guys. Well, thank you very much. I guess that was kind of a long video. Kind of got to ramble in there a little bit. I hope you guys enjoyed that. Thank you very much for the awesome gifts. I will enjoy these carnivore bars and while playing Monopoly. All right. Uneducated Economist. Oh, and I just wanted to remind you guys that we do have the Instagram channel up and running. I just wanted to keep promoting that out there for you guys. So in case you haven't caught on to that one yet, I do have the Instagram up and moving. And I do apologize to all the Patreon followers, Facebook followers, Twitter followers. I have slacked off on being active on those sites. I'm going to get active on those again. We are going to start posting videos on them pretty regularly. I do most of my conversation and activity here on YouTube, so if you have questions or, things that you want to talk about, I mean, you can certainly, ask me on those other sites. I'm going to have help keeping an eye on those things to make sure that, if there's comments that come up that are relevant, that I actually catch, I actually see them. But having that many social media sites going is just like, it's a little burdensome, so I have taken on a little bit of help to help me kind of manage some of the sites and keep an eye on some of the comments, and so that you guys can have a better experience on some of those other platforms and not just have me ignoring them, just posting videos there and walking away. So anyway, I hope you guys enjoy that and check out the Instagram. If you haven't been on Facebook or Twitter, go check out those places as well. I will leave links down in the description for these things, and let's see. I think that's it. Uneducated Economist. You guys let me know.